Good afternoon, everybody. My name's Peter Renton. I am the co-founder and chairman of LendIt Fintech. We are a global fintech conference series with events in the US, the UK, and China. Although our Chinese event is on hold for now. So we've got a really interesting panel here. We're sort of represented from across the globe. And let's just start off, just to give you a very quick, 20-second introduction for each of you, and then we'll get right into it.
Hello, my name is sherif. I'm the CEO of Zinobe. Zinobe is a data-driven fintech based in Bogota, Colombia. We develop products for the underserved markets in the consumer and small business space, specializing in payments and credits. We've been operating since 2012 and dispersed over 1 million credits to date.
Good morning, everyone. My name is Goulimis. I'm the co-founder of Nova Credit. We're a cross-border credit bureau, so effectively for anyone who's moved country, we help them port their financial identity with them so that they can access credit products, the things that I got rejected from when I moved to the States.
Yeah, hey, I'm Michael Cassau. I'm the founder and CEO of Grover. And Grover is the first innovation in the consumer financial services space since a whole while because we disrupt the commitment and the debt to consumers. So with Grover, people can rent all of the things they want on a monthly basis rather than buy or finance them.
Do we have another one? There is another one around.
No, I'm sitting on it.
There you go.
Hi, my name is Bala, and I'm the co-founder and CEO of MoneyTap. So MoneyTap is one of India's largest fintech platform. It's a credit-led neobank. We launched about 3 years ago, and we do about $350 million a year of disbursements, growing about 4x year on year. So an interesting place.
Okay, so we're all from different countries here. I want to just set the stage by talking about the lending environment, particularly when it comes to banking and non-banks and what that's like in each of the different countries you operate. So Bala, let's start with you and just tell us what is the lending environment like in India?
So the Indian lending environment is very nascent. India is at a kind of an interesting place. The infrastructure is sort of come in place. So we have about 500 million smartphones. So India is very sort of data rich before actually getting rich. So India is one of those countries where the data came first. But even with 500 million smartphones and growing, we still have only 25 million credit card holders. And that is the gap. A lot more smartphones, not credit cards. And that's what MoneyTap did by providing sort of a line of credit product on the phone. It's an app-only product, which gives you credit, but then integrates with multiple forms of payment, which is also another exciting trend in India that I'll talk about in a little bit.
Michael, I know you're not a strict consumer lender, but just explain what the environment's like in Germany.
Yeah, I think consumers are looking for options that suit them better than whatever the traditional product is that is offered to them today. I think if you look at our customer base, the product market fit, the excitement is really, really high. So people really say, wow, Grover's making my life easier, simpler, this is great, why wasn't this out there before? And the problem is that today we're offering, not Grover, but typically you offer the same financial product, which is a loan to consumers regardless of the underlying product. So whether this is real estate, which consumers may intend to keep for generations in their families, or it's a car which people may intend to use for 8 years or whether this is a drone that you just want to have for a month. All the way down, you offer people only one financial leverage product, which is a consumer loan, and that's inefficient, and our customers feel that.
So Nikki, I know you operate, you have a unique company in the
Thank you.
insofar as you are, again, you're not a lender, but maybe just explain the challenges in the US system and why you guys decided to start Nova Credit.
Yeah, I sort of alluded to this earlier. I mean, we started the company largely based on a personal problem. So when my co-founders and I, we're all not from the US. And so when I moved to the US, I applied for a credit card. I got rejected. I tried to get a mobile phone. I was shifted over to a prepaid plan. Then I tried to rent an apartment, and I was asked for a 6-month deposit up front. And I think this is probably a story that resonates with a lot of folks in the room. I see some nodding heads who've moved at different points in time and experienced just how challenging that can be. And the reason that happens is not because there's any malevolence in the system. It's just that financial identity is confined by country borders. So in my case, I had a great credit history in the UK, but I had no financial identity in the US. And so the US said, you have no file. Who are you? And so effectively rejected me because I looked like a very high-risk applicant. And so, when I think about like the lending environment more broadly, sort of where your question is going, it's structurally, I think, financial services and the credit system does do a good job in markets as developed as the US of serving, 80% of the population. But there is 20% or so of the population that cannot be served for a number of structural reasons. And one of those segments is immigrants. People who move across borders cannot get access to financial services, frankly, because there just hasn't been a way for people to know, is this a good credit risk or a bad credit risk? And you need credit data to make those decisions, and that's where we come in.
Okay, and then Tarek in Colombia, what is the system like there?
Colombia is actually very appealing for a disruptive alternative lender. So it's typical in emerging markets, very little credit inclusion. It's the 4th largest economy in Latin America after Brazil, Mexico, and Argentina. 45 million people with only 8 million credit cards. So there's 20 or so million people that are either not served or underserved. So data is very good. Payment behavior relative to the peers is also quite good, and just a very large untapped market that you can address.
Okay, so maybe just explain what your core product offering is, Tarek, and then tell us. Let's just start there, and then we'll move on into other questions.
So we provide revolving credit facilities to consumers and more recently to small businesses. And we've added payment capability as well. So on the consumer side, that involves paying for top-ups, bill payments, insurance, and other small ticket items. And on the small business side, it's for working capital purchases for cement and such products.
So did you start on the consumer side or on the small business side?
Sorry?
Where did you start?
We started on the consumer side, and we recently, over the last couple of years, started looking at expanding. So the small business expansion came about from more of a pull force. The 2 government entities approached us, one with the opportunity to provide funding for us, and the other one to provide principal guarantee. So they looked at what we were doing on the consumer side. We'd been operating for about 5 years at that point, and they wanted us to apply the same model, which was something online, something data-driven, something with a friendlier UX to address the untapped market for the small business sector.
So one more before we move on to the rest of the panel. What was the biggest challenge in product expansion? Like really, consumer and small business are quite different, but how important was it to you to add new products, and what are the challenges in expanding your product base?
Yeah, so going back on the small business side, it was just opportunistic. So looking at working with state-owned entities, getting access to discounted funding was kind of an opportunity too hard to pass up. And then looking at on the risk side, small business is very correlated with consumer risk, especially in emerging markets with a lot of mixture, crossover from different accounts and credit lines and so forth. On the consumer side, we started expanding, extending our maturities, offering payment capabilities, just looking naturally at monetizing our high net promoter score, trying to extend lifetime value. So we were having customers stay with us for about 2.5 years historically, and customers were very happy with our service. So we wanted to see how far we could go with our brand permission, how many more products we could add. And so we started leveraging our customers for polling and data to try and assess which were the best opportunities for us.
Okay, so Nikki, moving on to you. At Nova Credit, you you have this sort of unique proposition, which is really obvious. And I'm not American, and I moved to America just like you did, and suffered the humiliating consequences of that. So, what is the reason that our credit data is so siloed within countries, and what are you guys doing to change that?
Yeah, so if you look today, there are a growing amount of credit bureaus in pretty much every single country around the world. So in the last 40 years, you've gone from about 30 credit bureaus to about 200. So the data exists, and it's higher and higher quality data, more and more banking penetration, more and more digital banking, more and more capture, sort of like the trends, Bali, you were describing in India with pretty amazing credit reporting there as well. However, credit reporting does operate at a country level, and there are a number of consumer privacy and so forth regulations that mean that moving it or accessing it in a different market would be really hard. So let me give you a very specific example. If I'm a bank in America and I say I want to go partner with the Indian Credit Bureau and just access that data directly, first of all, you're going to have to do partnerships with 194 countries around the world. But secondly, you'll find that there are a number of hurdles to even accessing that data. First of all, is that data compliant with the US market? So a number of countries will report things like gender, which aren't compliant in the US, or they'll have data greater than 7 years old, which doesn't comply with US regulation. And the same would work in any direction. Like no two countries' regulatory systems are exactly the same. And so you need some element of like making the data compliant. You also need some standardization so that you're able to make an apples to apples comparison. But the third and probably the most challenging piece is around someone has to be responsible for the data in the US, quite rightly. Like if there is an error in the Indian credit report and the consumer wants to fix it, the consumer needs someone to turn to be able to fix that report. And the Indian Bureau is not going to be responsible for what an entity in the US does. And so Nova comes in, and I think we solve that. We've built the network of partnerships around the world. We've done a lot of heavy lifting around the data standardization and compliance. And then lastly, we've built the infrastructure to be responsible for the data. So horrifically, and I'm allowed to say this now, but in the early days, consumer disputes would be my cell phone number, but we've grown a little bit since then. And similarly, on the data mapping and standardization front, our head of risk and analytics is an industry executive. She's really the leader in the field. She built VantageScore for the last 13 years. And so having her expertise at truly building what is a global credit score has been vital to the adoption that we've had.
So maybe just real briefly, just talk about who you're alive with in the US today, and what's that process like for an immigrant to go and apply for credit in the US?
Yeah, so we work across 3 sectors today. So financial services, if you're applying for some form of a loan, we do everything from student loan, auto lease, credit card. Our biggest partner in that space is American Express. We work in the telco space as well, so hoping to have some public announcements we can share there soon, but similarly, people trying to finance a phone. And then thirdly, we work in the real estate space, so someone who's trying to apply for an apartment. And part of the reason we're here is, we distribute into the US today, but we are very much looking to expand into other markets. There's an interesting, I was sort of thinking as the different businesses are talking about this tension between like B2B and B2C. We have fundamentally been a B2B business because I can give consumers all the data in the world. They're still going to apply for a financial product and get rejected. You need the user of the data, the bank or the property manager, to get on board. However, so that means that, just to be very specific, a consumer interacts with us when they're applying for a loan. So mid-application, you'll see the Nova experience. It's totally embedded. It's a widget similar to sort of Plaid or Stripe for folks who use that, so that we're sort of able to pull in people's credit data seamlessly into any application. We have, however, been recently toying with a consumer product, but I've been talking for too long, so I'm now going to pass it to someone else. Okay,
so Michael, then you guys have been called the Netflix of tech, of consumer tech specifically. I think the major challenge in that is that people go into a store or go to a website thinking that the option is to buy the product on a credit card or not buy the product. How have you been able to educate the consumer that there is another option?
So I think at the beginning it was a lot about. So I think it's always about getting attention. right? So attention is the one thing that is the scarce asset in consumer. And the question is, how do you get the attention? You need to get the attention on A, that this option actually exists, and you need to get the attention that if you wanted that option, then it's Grover for you. So we do, first of all, a heavy investment into brand building and brand marketing, I think, because it needs to be very disruptive. It needs to disrupt your day-to-day. It needs to be memorable. It needs to enter into the day-to-day of consumers that option exists, and that option is Grover. So in addition, you don't have much of a brand, of a consumer brand, usually in consumer finance. It's blue, it's dull, now brands are coming up and they're redoing, but I think only 3 years ago, for instance, Klarna didn't have a consumer brand. Now they do, right? So branding is critical, and building a product that is consumer focused. So that's one thing, really being out there, communicating and saying, hey, these are the benefits you can rent with us, and then identifying for us as well who are the customers with the highest product market fit. So we know today it's 3 groups effectively. People who say they always want the latest products. For them, it's very efficient to just rent every year the latest or so forth. The marginal cost is, in some instances, 0 when you exchange the underlying product, when you just upgrade. And the second group is people who seek flexibility, no commitment. And the third group is people who seek leverage. So they don't want to spend the money, right? They seek the same kind of use case as they have on the consumer loan, but they say also, I don't want to have a debt. I don't want to take out a loan. I'm only taking out loans for real estate or cars or whatnot. So that's the second thing, is really identifying who is your core customer group, and then targeting and communicating to them very effectively, such that the likelihood of perception is really, really high. So that's one thing, is really kind of getting a wheel going on the customers who are most likely to be perceptive of this knowledge that this is new, that making obviously a big noise about it nationwide. And the third thing is working with retail partners who have an established brand to have either online presence in their website, which we do today. So you see a Rent with Grover button on the product detail page of many of the products that a consumer retailer will sell. You will also see this now in their offline physical stores. And so this is increasing the number of touch points, and then it's on us again to communicate and educate, and in the case of offline, having a local store employees being able to communicate the benefits and the story of Grover, of renting with Grover. And online, it's on us to really be very specific. What are the do's and don'ts? What can you do? What can you not do? And then I think it resonates very quickly with the people that it resonates with, meaning it's relatively binary as well. So I think we're all going to be able to find people who will say, no, thanks, it's not for me, I like to buy my stuff, and then I really try to keep it for 5 years or longer. I still use the iPhone 5, and that's perfectly fine. Those people exist, and it's a no, and it's absolutely great, because we can then focus on the people who are very likely to do business with Grover, who say, yes, I always want the latest, this is for me. I want to have flexibility, that's exactly right for me. I want to have the leverage, I don't want to spend the money, I only want to spend money on myself, on experiences. I want leverage, but not to have that. This is exactly for me. So
you're saying your customers are not really choosing between, say, your product and a credit card and maybe Klarna? They're really self-selecting out of that process?
Yeah, I think what our customers understand really well is that the Grover business model is the only way almost to do sustainable finance. So many of the buy now, pay later options put people into debt. I just read a Financial Times article recently where a Christmas gift is, I will pay your Klarna balance. And I think this is one of the areas where consumers benefit from doing business with Grover, is that if you inherently want to stop paying, it's very easy. You just return the product to us. You just return the product. Imagine that. You want to get out of that, you just send back the stuff you took it on in the first place. So it's very flexible. We don't put people into debt, and that's great. That's one thing. The second thing is that we're circulating products, actually, meaning we're incentivized to only allow rents on high-quality products with the extended lifetime, rather than offering a credit option on a product that may only be in the market for 6 months and then it's electro waste. We also recirculate the same device to multiple people, extending the life cycle. And that makes us the part of the top 100 global companies in this circular economy thing, which we're nominated to. So.
Okay, so moving over to India, and you mentioned, Bala, the huge increase in smartphones, and and how that's enabled your company. What maybe just take us through that process, and is your app only available on smartphones, and just tell us how that all works.
Yeah, so the app is available only on smartphones. And the way the process works is very simple. The customer downloads an app, and in a matter of about 10 minutes, we're able to underwrite using AI and ML. We use both traditional data, such as bank statements, et cetera, and credit bureaus, as well as alternate data to underwrite. And then we provide them a flexible credit limit. So they can use that to take cash out. They can use it on mobile wallets, which is a whole new thing in India that's growing like crazy because of various other trends, like there's something called UPI. I'm happy to talk about that, which are very unique to India, the Indian environment. Or they can even use a plastic. But in our case, the credit card is more like an afterthought. Right? India's jumped from no infrastructure to a land of smartphones and very, very cheap data. You can get pretty much unlimited data for $3 a month. Almost everybody is on data right now. You can get data everywhere in villages. I mean, I've been to the most remote parts of India where you have smartphone data. So that is basically just fuel the business. And yet credit is not available because credit is a tricky business, as we all know. And that's kind of why we are coming in. We're coming in as like sort of the next generation bank, which is leading with credit. And we are able to use some of the infrastructure, the smartphone infrastructure, the mobile data infrastructure, and this thing called UPI in India, which is just really an interoperable standard that the government has built and given away for free, which anybody can integrate with. And that has gone from 0 to 1 trillion transactions in 3 years. That's 1 trillion transactions a year. It's just unbelievable, even for somebody like me who lived in the Valley for 17 years in Silicon Valley, and I've seen serious tech changes. But what is happening right now is just mind-blowing.
So then, if someone downloads your app and they take out a loan, what are the data points that you're using that gives you a good indication of an accurate credit rating?
So the credit bureaus in India are there, but they're very, very primitive. So we use a combination of credit bureau data. We use a combination of basic things like bank statements and so on and so forth. And we also use other data, like which apps are running on your phone. Everything within privacy laws. We are a summation of all kinds of privacy laws. Like we have a version of GDPR and Google privacy and so on and so forth. But basically, we do a bunch of things like your SMS history or app usage history. But it's a combination of all of this that's what is unique about us. That's what enables us to underwrite the loan.
Okay, so I want to open it up to anybody right now, and I want to talk about partnerships. We, it was talked about this morning in the opening keynotes, and the whole idea here of startups partnering with big incumbents. How do you approach that where you are a tiny little company that the big incumbents never even heard of, and go from there to having a successful partnership? And anyone can jump in.
I think for us, we learned early on that you can't approach these partnerships too early. So we were getting approached by a lot of large institutions after a couple of years, and we realized that we have different agendas, that we can't waste resources. We're looking to execute and have some real milestones, where a lot of the large institutions are looking just to have meetings and very high-level discussions. So we kind of curbed those discussions until we had sufficient resources that we could dedicate to exploring different opportunities. And then that came about after being in operation for about 5 years, and we had validated our model. We had sufficient client base that was interesting for larger institutions. And the first big partnership we did was with the third largest bank in Colombia. And it showed how our fit was not really disruptive for the banks, but more complementary. So we were giving credit to clients that the banks were not really interested in giving credits to, and we weren't competing for the deposits. So it was a natural fit where we were integrating account opening for a new digital account in our credit application process. And that way it was beneficial for them that there was traffic provided to these new accounts. And we were, having a partnership with a large institution to give us credibility.
Yeah, for us, I think we started working on partnerships when we were, 3 months in or something. So I think we had the structural challenge of just, the bulk of lending in the US is still done by 25 banks. And so we had to do really large-scale partnerships to really enable our business to grow. I think for us it was, the things we ran into very quickly was, you're asking us to serve a new customer segment that we know nothing about. You're asking us to use a new data set that we know nothing about. And you're a new company and we know nothing about you. So how do we trust you? And that certainly has been like a big area of focus for us. So I think where we've invested a lot has been in, how do we make every single interaction with a big bank partner extremely valuable and create a lot of value to them in every time we meet with them so that we can earn their trust? How do we educate them on this consumer segment and share industry data? How do we educate them on our credit data and talk about, here are its strengths, here are its weaknesses, here's how you can think about it, here are some other analogs. And sort of over time be able to build the type of partnership that we have built. But I think for us, it's frankly part of our theory of change in the fintech space is that point solutions are amazing, but long term you do need to build something that goes across the industry to long term disrupt it. And I think financial services are so convoluted, particularly across borders, that you need to build an ecosystem. And so for us, we've had to build partnerships on the supply side, working with Equifax, Experian, TransUnion, where we're integrating with their data sets in different countries, and then on the demand side, selling that data to large FIs. On each of those sides, that sales cycle can be or buy cycle, I guess, can be 2 years. But I think it's the investment that long term creates the opportunity.
Go ahead. Yep. Sure. For us, in lending, especially in India, it's very regulated, and partnering with banks is critical. So it took us 1 year to launch the product because we had to partner with the bank on day zero. And it's challenging. It's not easy for a startup to partner with a bank. It's like dancing with like a gorilla and an elephant, sitting on top of a gorilla or something. But that's what we did. And but now it's helping us scale. So as we need to sort of go 3x next year, all those pipes that we put in place is going to get us there.
Yes, so we also have a long history of working with partners. So since 2017, you can rent with Grover in one of the largest retail e-commerce retailers in Germany, which is MediaMarkt, for example. Our experience is really well. I think startups like ours can help retailers achieve more, do things that are new and differently, because at the beginning in particular, this is a low risk endeavor for an innovation team within the company rather than for a seasoned manager just say, I want to change the way we do business. So the internals are very, very simple to work with a startup. If they have an innovation team, that's one thing. It will take long. The company will have a modus operandi which is already established and probably different from a startup. But I think from our perspective, we see a lot of open-mindedness, willingness to make things work, and also understanding from the other party that there may be things that are changing and that it's worth finding out what it is exactly and how new companies can help.
Yeah, because I can see with your partners, it's all additive for them, right? Because these are probably people that.
Yeah, we always told them at the beginning, look, guys, let's not say you're big, we're small, right? We're the ones with the money coffers. You have 100 people on your website today. 10 buy, 10 finance, and 80 go home and do nothing because you don't offer something that they want, and that something is a flexible option to access the products. And so they're happy. Now we're online with our retail partners for 3 years now. That's great, but I think this is also good because we shift the demand to high quality products. So someone may have bought a product that, I don't know, is lower quality, that will be thrown away every 6 months or so. Now instead they can subscribe to and rent a higher quality product that gets into the cycle for longer.
Yeah, makes sense. Okay, so we're running out of time, but I want to get to another very important topic, and that is capital. I mean, lending is a capital-intensive business. I think everyone, I mean, maybe with the exception of you, Nikki, although you had to raise equity capital, but I'm thinking about sort of the debt capital specifically. How have you been able to just tell us how you're funding your business from the debt side of things? Bala, we can start with you.
Sure. It's an important and interesting topic because we just announced an extra 40 million, a huge capital raise, $40 million of debt and another 30 of equity today. So it's very relevant asking me this today. So Indian capital markets are notoriously very tight, but I view that as an advantage. And the only way it works, at least in India, is that they need to see track record. So now that we have 3 years of vintage, capital is available. It just comes at a cost. But in India, the pricing is fairly flexible. So we don't have predatory payday kind of pricing, but we have a large range of pricing. And so I think the longer you are in this business, the lower your NPAs are, your delinquencies are, the more capital is available.
Michael, you guys signed like a funding line, I believe.
Yeah, we did. So financing and the entire finance area is for us critically important because we established for lenders effectively a new asset class that you can lend against. So we do with iPhones or any other product, computers, headphones, the same that debt investors have been doing with real estate, which is we borrow against the market value of the product. And that makes, or with cars, for instance, in the past as well. So we established a new asset class, and we syndicate the portfolio to lenders, and we're establishing something that is a asset-backed lending product. And on that, we raised now over 280 million in total, 200 just recently, and that balance sheet just always needs to expand because it's a very big market.
It's an capital intensive, I can see.
Yeah.
So maybe Tarek, what's your how have you been able to raise lending capital?
So we've gone through the different cycles from equity funding to high net worth individuals, and now we're at the institutional stage where we have quite a diversified strategy. At this point, we have excess debt funding options. So we've recently signed a $50 million facility with a US fund, and we have 2 or 3 other options out there to kind of match duration better with our portfolio. But it was a struggle in the beginning, but I think once you have the track record and you're able to kind of sell some type of stable return, there are a lot of options out there.
Right, and it seems like with Latin America, it's becoming a lot more open when it comes to capital, particularly from the US. I mean, you spoke at our Miami event not long ago, where we were really taking sort of the Latin American fintech companies. I wouldn't say they're the flavor of the month, but there's a lot more interest than there ever has been. And has that made things easier, I imagine?
I think Latin America is very localized, so I think it's country by country. So a lot of those big success stories have been in Brazil just because of the size of the market. I think it has brought attention to the region overall, so that has been good. But I think Colombia's benefited more from, let's say, the highest profile success story is on the delivery side. So I think for those type of investments, maybe where success is in the fundraising, you have to try and take advantage of that window while it's still considered a success and try and monetize it then. But yeah, in general, I think Latin America is quite fashionable right now, but it is kind of country by country because of the different exit options. So Brazil has a couple of companies that have IPO'd, so PagSeguro and I forget the name of the other one. But most of the other markets, the exit options are still not defined. So there's still some uncertainty there in the long run.
And so, Nikki, you've raised equity capital. You're not haven't got a lending operation. Tell us how that process has gone for you guys.
Yeah, we've been fortunate as a company. We've done a few rounds of financing now, and actually we'll have some exciting news later later this month. So watch this space. Well, later next month, watch this space. But no, I mean the capital raising for us, I think, has always been very focused on, the first round I think was really around like what is the market opportunity. And true conviction behind this business, because I think our business is not one for the faint of heart. It requires someone who has a belief in fundamentally a global financial system. As we've progressed through subsequent rounds, a lot more has been about our traction and our performance, our ability to build this credit bureau from scratch, our ability to partner with large partners, our ability to serve thousands upon thousands of consumers. And so in many ways, the requirements of each round have changed, but ultimately our investors are ones, we were very lucky. We have a very international investor slate. In the first time, we have a mix of European and American funds, as well as funds that have an increasing focus on China. And so that's been a big element for us in terms of the backing that we need.
Okay, so wrapping things up, I want to go through and hear from each of you talking about something that you're excited about. We are here in a new decade. Fintech has got so much potential in this decade. What is something that you're working on as a company that you can share publicly that you're excited about? Bala, we'll start with you.
Ours definitely is regional expansion. So we've been working on it for the last 2 years. And we just did a beta launch in 2 countries now, and so this year is going to be expansion in our region, because we see the need for almost identical product, same kind of constraints, high smartphone penetrations, low credit penetrations, and using data to underwrite. So regional expansion would be my number one.
So what are the countries you're launching?
So we would be out in Vietnam, which is a super exciting market for us. It's very similar to India and in the Middle East.
Michael, what's exciting?
Many things are very, very exciting. But I'll share one thing which we shared already publicly. So I think this year we're going to launch a Grover flat rate, 99 euros per month for any 3 products. So really kind of getting this to the next level of flexibility and access to things for our customers. We'll see how that goes. Internationalization obviously is a topic for us as well. And then there are a few other things in the pipeline that I cannot talk about today.
So internationalization, you mean within Europe or even outside?
Let's see.
Okay.
Yeah.
Okay. Nikki?
So in the short term for this year, we're really focused on how do we grow our platform. So we're looking at both adding more data sets, moving beyond just credit data to alternative data. That means we can serve a much broader swath of immigrants from very different markets and serve the ones that we already serve more deeply, truly having a global credit passport. And that also means building out software for how we serve consumers directly, as well as how we can integrate more seamlessly into banks. But for the long term, I think the area that I'm very excited about right now, and a lot of this conference has stimulated further, is this piece around can you actually start doing financial services across borders? That's not something that we solve today. We solve the credit data piece across borders, but I think there are some fascinating companies here, both in the payments, the cross-border payments piece, but also starting to build global checking account or other areas like that. And so I think as we look long term to the future, shouldn't it be that every single one of us sitting on this panel today, every single one of our countries should have the same interest rate for the same profile of consumer, rather than the different interest rates that we have today? Shouldn't everyone have the same checking account experience no matter what country they're in, given that every single other product we access is truly global? And so, I don't know, that's kind of, as I look to the next decade, I think that's a fascinating and exciting space for us to look at.
Indeed. Tarek?
So for me, on the local Colombian side, I think continuing to scale the small business, which was relatively new, it's even more wide open space than the consumer side. We're also looking to launch a credit card in Colombia in the second half of this year as well, partnering with MasterCard, hopefully. But probably the most exciting thing is we're doing our first regional expansion to Mexico. partnering with a medium-sized institution, so a lot of things to think about there, not only going to another country, but partnering with a larger company. That's going to be on the small business side, and it's kind of ideal in that we're leveraging both our strengths. So we're using their operational experience, their resources, and then our focus on tech and data. So on paper, it sounds like a very good fit.
Okay, well, we have got 20 seconds left, but I think we'll give everybody a little early break for lunch. Thank you very much, and please thank the panel.